Okay, cool. All right. Yeah, Paul just asked me to speak about things that might be concerning people, and I tend to sort of break it down into sort of cash areas in terms of sort of bank accounts. Just a little bit of sort of thinking around that in terms of what people might be thinking about. But the other main area I get lots of questions on at the moment, obviously, is what do I do with my existing investments and pensions? So I'm going to sort of spend a little bit of time on that as well, and then just answer any questions. So in terms of the bank account side of things, obviously accounts generally in the UK are protected by the Financial Services Compensation Scheme. So that's £85,000 per person, or 170,000 as a couple. And it's fair to say ever since 2008, pretty much all of the banks have been regularly stress tested in terms of their sort of liquidity position. So I don't think there's any concerns about any banks that particularly are likely to sort of suffer as a result of this, because they're positioned for it particularly well. But obviously the Bank of England reduced interest rates recently down to virtually nothing. So in terms of return on bank accounts, we're not seeing very much at all. Generally, in terms of instant access, there's only a few reasonable deals out of there in terms of what I would call a pure savings account. Obviously, so there are some current accounts that still, provided you pay so many direct debits and have a certain amount of money coming in, offer a good return, but that's normally only for a few thousand. So generally, it's not a significant return. In terms of instant access accounts, the account that tends to be sort of generally popular at the moment, it's been quite a good account for a while, is an account called Marcus, run by Goldman Sachs. That's currently running at about 1.3%. So again, if you're looking to sort of find an instant access home because you need to sort of have availability of money rather than tying it up, that's one that I'd probably give thought to. In terms of fixed interest accounts, then there's not a great deal out there that's much better than instant access at the moment. Certainly if you go beyond a 1 year fixed interest rate, then you tend to find you're not getting much better deal at all. The 2 year fixed rates are generally only about 0.2%, if that better than a 1 year fixed rate. So I certainly wouldn't be thinking about fixing money for more than a year at this moment in time, just because the difference is pretty much negligible, really. In terms of the main concerns around sort of pensions investments, obviously it's the $64 million question that the clients ask me is, you know, should I sort of come out of equities and other riskier assets and go into either a cash fund, a money market fund, or a fixed interest fund? And they'll always ask, you know, is it going to fall any further than it is at the moment? And that's a question that you can't really answer, other than all you can do is think about what history has sort of shown in the past. And certainly as a financial advisor of some sort of 30 plus years, generally the big moments in time, such as 1987, 2008, the developed markets have generally fallen by no more than a third. If we think about sort of where the FTSE is today and where it's been bouncing around over the last week, in comparison to the high of a few months ago, then it's probably around about that sort of 30–35% fall, because it's currently at about 5,200. It's had a slightly better day today. I think it's reacted positively to the lockdown news that Boris gave out late last evening. So where it's likely to travel after this, it's difficult to say. If I had a crystal ball, that would be great, but I don't. But history has shown that generally about where it is at the moment is historically the further it's fallen. So if people are genuinely concerned about further falls, then ultimately they have generally got the option to go into a money market or a cash fund with their investment company or pension company. Obviously, the flip side of that is that they may not benefit from some of the bounce back that will ultimately occur at some point in the future. What we don't know is how long that's going to be, because we're in unprecedented times and we don't know how long it's going to take before we see a return to normality because of the coronavirus being sort of ultimately dealt with, and hopefully we'll start to see the numbers go down in the next few months, but only time will tell. Certainly out in China, the position seems to be improving. So personally, I would hope that we get on top of this, and I think the lockdown and people sensibly staying inside should sort of hope. The other thing really is to possibly think about sort of where maybe your investment levels are, and think about sort of how well protected you are in terms of maybe the future, because some of the issues that my clients have had is that they've been in just a single fund, for example. So even though that fund is a mixed fund and it's got lots of different assets in it, ultimately, because it's basically like putting all the ingredients into one pot, like you're baking a cake, and what you can't do then is separate them back out because you're simply in a single fund. And the trouble is the fund then, because it's generally equity based, normally around about 50–60% for most sort of pension funds that people would find themselves in, the fund has fallen as a consequence of that. So I think my message really is for anybody that is concerned about investments, and particularly pensions, I think now is a good time to at least have a look at what they have inside the pension fund. What funds are they in, and is there something they can do to maybe perhaps mitigate some of the risk by having a number of funds in there of individual asset classes rather than all lumped into one fund. And certainly I'd say if you've got anybody that you know that's going to be thinking about retiring in the next 5 years, then they need to think really strongly about sort of what retirement's going to look like for them. What's going to be the best style of retirement, because historically most people would have purchased an annuity, but nowadays 3 out of 4 people choose not to, and they choose to draw off their pension by way of the rules that were introduced just over 4 years ago by George Osborne. But ultimately that really needs to be planned for, because there are mechanisms often built into pensions to either de-risk them, what's known as lifestyling, or simply just to leave them fully invested. And if you don't know what's going to be right for you, it might be that your pension's moving in completely the wrong direction to what actually would be the best shape and style for you. So all I would say is that if you do know people and they've not really had any advice on their pensions or investments, certainly I think it would be a prudent time to do so, because they could possibly make a few sort of adjustments that would actually prove to be pay dividends, as they would say, sort of going forward. So yeah, I don't think it's a time to personally make significant changes. I think most people invest for the long term, and ultimately markets have come back in the past, and I believe they'll come back in the future. So my advice generally is for most people to sort of leave their investments certainly in terms of the same asset allocation as they stay at the moment, even if ultimately they choose to separate it out at this time, which they could certainly do if they wanted to. So I think yeah, the message is that try and sort of remain calm about sort of some of the falls that you may have seen in terms of investment values. And I think with good fund management and better times ahead, which ultimately they will be, then we should see that some of the values come back. So that's my main message really.
Okay, right. Does anybody have any questions for Stephen while he's here live? Can you see the chat room, Stephen? Someone's from Mark. Given the low market, is this a good time to invest?
Well, often it is a good time to invest, because ultimately history has shown that markets do come back. How quickly they'll come back, it's difficult to say, because ultimately we don't know how long this will be with us. But yeah, I would say if you're brave enough, now is definitely a good time to consider investing. either on a lump sum basis or on a regular basis. Certainly in terms of on a regular basis, there's a term called pound cost averaging, which ultimately means that you get more units every time you make a monthly contribution. Obviously, because the values have fallen quite significantly, you'll get many more units than you would have done, say, 5 or 6 months ago. And then when the markets do come back, the value of those units will be that much more. So, yeah, I would say certainly if people are sitting on cash, which is earning very little, then yeah, I would consider investing at this moment in time.
Okay, I'm going to unmute James so he can ask his question live. James, the floor is yours.
You made me type it all out, and then you unmute me, Paul. Yeah, thank you. Stephen, my question is now a good time, in your opinion, to invest in a stocks and shares ISA? Because I guess a lot of us guys at small business owners don't have fortunes to chuck into investments, but if you had 5, 10, 15 grand in a moderate risk stocks and shares ISA, would that be a good sort of way of possibly benefiting from, as you call it, the bounce back, the recovery, without risking an enormous amount of capital?
Yeah, I think the main thing is that it should be money that you can quite comfortably see that you're going to be able to leave in there for 5 or 6 years or more. I mean, that's the one standard that's been in place for the last 30 years since I've been an advisor, just because of the vagaries of the market and the fact that clearly they do go up and down. I often say to clients, if you hold an investment or a pension for a 10-year period, you're going to get 8 or 9 annual valuations that bring a nice smile to your face because they've gone up quite nicely, but you're going to get 1 or 2 where the value's gone down. The good news is the average over that period of time should be well above inflation. So, yeah, I would say certainly stocks and shares ISA, completely free of capital gains tax, grows tax-free, the income comes in tax-free. It's a good vehicle to sort of invest in at this moment in time. And like you say, maybe a medium moderate risk would be a sensible sort of level to come in at.
Thank you.
Now you're muted again, James. Anybody else got any questions? Looking, nothing. Looks like you're done, Stephen. You've obviously answered everything people needed to know in your first 10, 15 minutes or so.
Yeah, I think the main message is that, not to be concerned. People are going online, looking at some of their values, and it can look very, very, very worrying. But I think fund managers behind the scenes are positioning themselves, de-risking as much as they can. But ultimately, it's just remaining sort of invested at this stage, and the markets will come back at some point, and history has shown it's normally 12 to 18 months.
So what's your industry doing then? Are they sort of embracing technology like this to engage with people? I guess it must be a bit difficult because I guess people have to sign things, don't they, for financial investments?
Well, yeah, I mean, that they are. Again, it's out of necessity, I suppose. They're having to sort of reinvent things a little bit, and certainly they're able to take sort of digital signatures, that sort of thing. So I've already spoken to a number of clients and had some Zoom meetings with people that generally are sort of out of region. So yeah, I think it's just making people think about it, and ultimately we can send information to them on an encrypted basis. So from a security point of view, anything that's got personal data or information on it is done in a safe, secure way. But yeah, very much so. I think for a lot of people it will perhaps change the way they perhaps hold some of their review meetings for customers that have moved away, that sort of thing. I've had a lady that's moved away down to Devon, and we had a telephone call, and that followed with a video chat once I'd worked out how to use it. So yeah, I think it'll change quite a lot of industries, particularly industries like ours, where you're able to do it perhaps slightly differently.
Okay, there's a couple of people on here that are doing sessions later in the week, so I'm going to ask them to say what they're going to be discussing. James, I'm going to put you back on. So James, you've got a session, not quite sure when, later this week at some point. What are you going to be covering on your business bulletin?
Well, as it's the session's on Thursday afternoon and it's currently Tuesday afternoon, it's
Who knows?
not actually done anything on it yet. I'll be covering the government's business loan interruption scheme, which is obviously this vehicle which a lot of people have heard about, which is going to, in theory, even though the theory is slightly flawed, guarantee 80% of the debt for the client. I'll also be covering any alternative support that's out there from the peer-to-peer marketplace, alternative lenders, etc. So I'll be covering all that stuff. So basically, if businesses need to borrow money over the upcoming days, weeks, months, I will be signposting them to schemes and options which will be available for them.
Okay, thank you, James. Sue, you've got something coming up, haven't you? So what are you going to be highlighting?
Well, I've written what I think I'm going to cover, but it could be subject to change as well. So mine was really about companies with employees and what the options were currently to help the companies and help employees. So I was going to talk about whether people had to close their business, who was seen as an essential business. What's furlough? So furlough has now come into our language, which before Friday wasn't there. So furlough is part of the new coronavirus job retention scheme, and how people can actually use that to potentially lay off people as well. And also something about remote working. So there's a lot of people working from home now who aren't used to that. So how does a company make sure that they're safe and doing things properly and making sure that they're also productive? So sort of, you know, different things, I suppose, and potentially something about sickness if people want questions to be answered about sickness. So anything employee related, I suppose.
Okay, cracking stuff. I don't think there's anybody else on that's going to be doing anything. He says, quickly checking before he drops himself in the shit. Neil, I think you were suggesting to do one way. I'm not sure whether you booked a slot yet.
Yeah, I filled it out earlier.
Okay. What were you going to talk about?
Well, obviously we've got coronavirus at the moment. That's affecting businesses. Some businesses are still working, so you know what thoughts they need to have around their employees working coronavirus. Where people are working from home, there's lots of questions, especially at the end of last week, from employers. What do they need to provide for their employees when they're working from home? And the one that's come up recently in the last week or so is delivery drivers and what companies need to provide for delivery drivers attending their site. So things like that.
Okay, right. So if any other of you on here think that you've got something to add specifically around the coronavirus at the moment, then that's what we're focusing on, just giving people as much advice as we can for free. So we're doing 2 or 3 of these a day at the moment. We might sort of like reduce those to 2 next week, but the intention is probably to have this be a platform, these business bulletins, and just invite people to just give advice on a regular basis going forward when all these shenanigans are over. So thanks to Stephen for coming online today and sharing his knowledge. And there'll be some more tomorrow, as we said. So please share the links and let people know these are out there so we can support the business community as a whole and get people through this. So thanks very much for attending today.